lanes blocked. Very heavy on the New England Thruway at the Connecticut state line. Construction there. The roadways reduced to 2 lanes. 440 in New Jersey, northbound at Truck Route 1 and 9, an accident blocking the right lane. And 208 northbound into Goffle Road in Hawthorne. There's construction only. The left lane is open and big delays. We've got some road work at the GW Bridge, or bridge work, if you will, outbound. We've got on the upper and lower deck the right lane blocked, and that's causing big delays on the Cross Bronx Expressway all the way back to the Bruckner. Inbound at the GW Bridge, you're okay. Lincoln Tunnel, you're fine. And at the Holland Tunnel, inbound delays running about 20 minutes if you use 1 and 9. This report is sponsored by LifeLock with Norton. LifeLock with Norton Security is the identity theft protection and device security you need against cyber threats in today's connected world. Join at lifelock.com. Use promo code RISK for 10% off your first year. Bloomberg 11:303 day weather forecast. Sunshine today, less humidity. Highs 85 to 90. Tonight clear, low 65 to 70. Tomorrow a mix of sun and clouds. It'll be breezy, high 85. Tomorrow night clear, low 65 to 70. And on Sunday it'll be sunny with highs of 80 to 85. Currently 72 degrees with the best ride in and out of the city. This is Bloomberg 1130. Bloomberg surveillance continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash 947 on Wall Street. U.S. stocks in the early going, they're falling. Treasuries, the dollar, they're kind of mixed at this point. Investors again fretting over the trade tensions with China. Chip makers, as you might expect, leading the S&P 500 slump. This comes after Bloomberg reported the Trump administration delayed licensing decisions for American companies to restart business with Huawei technologies. The S&P 500 was poised to hold a 3-day rally that wiped out losses from Monday. However, that is turning around right now. S&P 500 is 9 points lower. That's down 0.3% at 2928. The Dow Jones Industrial Average 55 points lower. That's down 0.2%. We're at 26,321. The Nasdaq Composite Index 43 points lower, down 0.5% at 79.95. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. That's your Bloomberg Business Flash. Tom and Paul.
Thanks so much, John. Paul Sweeney is going to lead us forward here into the land of the gig economy. Drive with Uber. Earn at least $1,150 for your first 150 trips in the New York City suburbs. That's $7.66 per trip.
Yep.
That's on their website.
That's not a living.
And I don't know, do they have New York City? No, they don't have New York City. They just have suburbs.
That's an example of the gig economy. Uber reported some numbers last night. Very disappointing. Stock's down 9%, Tom. Let's see what's going on there. Matt Bloxham. Matt covers all things tech, media, telecom for Bloomberg Intelligence in London. So, Matthew, we had good numbers coming out of Lyft. That kind of raised everybody's expectations for Uber. What went wrong?
Yeah, well, I think perhaps to some degree, maybe just a difference in their ability to manage market expectations. I think Lyft's taken perhaps a more kind of classic approach of, giving guidance for the next quarter and the year and doing what you'd hope for from an IPO stock, which is to actually, deliver and beat on that guidance to give people comfort about why they bought into the stock. And Uber, since the get-go, has been vaguer around, what the growth would be this year. And so I guess they haven't quite kind of kept expectations in the same kind of tight control. And obviously, with the excitement around the Lyft results and better than expected revenue and a positive outlook for the rest of the year, obviously people got quite excited for Uber as well. And it's kind of hard to see how they're performing like for like with Lyft, because Lyft's just US and Uber is a much more complex global business. But I think it's some of the revenue miss is being attributed to a one-time incentive they gave to drivers on the IPO. And to be fair, management did talk a similarly positive story to Lyft about the second half of the year, particularly with prices going up in some key markets, including the US. And they did point to better growth rates at the top line for the second half and improving EBITDA losses.
So, Matthew, I saw just, the headline number looks very bad, a $5.2 billion net loss. And I know there's a lot of IPO stock-based compensation in there, but it just kind of raises the issue once again, the number one risk arguably for not just Uber, but also Lyft. And that is that path to profitability.
Yeah.
You think about how the costs, are pretty variable. So they tend to scale up with revenue, and it kind of suggests, is there a business model out there where these guys actually make money? Any more clarification there?
You know what? I don't think there really is, and I think it's much harder with Uber than it is with Lyft because it's such a more diverse business, both geographically and in terms of product lines.
Yeah.
We saw some improvements this quarter, but last quarter their contribution margin was negative. So you look at a business and go, well, where's the business model if your contribution margin is negative? It went positive this quarter, but it's been very up and down. And I guess one of the kind of big buzzwords with Uber and Lyft is take rates. That's the kind of the amount of money they keep from that. Every time you spend $10 with an Uber driver, they get about $2.
Who gets $2?
Yeah, so that kind of 20% take rate was down quite a bit year on year. It improved sequentially, but people have still got a lot of questions, about exactly what this business model looks like longer term.
Is a general statement away from the MBA speak, and I'm going to Ridester.com, who's done really definitive work here on what actually how your Uber car fee gets parsed. Is there any model that shows anybody at any time is a driver making a day's wage, or is a shareholder seeing profit at the EBITDA line, or is it a spreadsheet out of Bloomberg Intelligence?
Well, I think if you kind of look at what the average street expectation, certainly for Uber, you have to look out to 2023 to get a positive EBITDA number.
Thank you.
A lot of things could happen between now and then.
Paul, give Matthew Block some perspective on this. You don't do that in this racket. You don't vector out 4 years, do you?
That's what, Matthew and I have talked about this a lot, along with Mandeep Singh, who covers these names as well. And it's just, we were kind of surprised that companies like that have that long lag time before they reach profit would come to the public markets and get that valuation that they got, and that investors were willing to pay that valuation here. But, so Matthew, both of these stocks are below their IPO price. What do you think investors need to hear or see for these stocks to perform better?
Yeah, I think it's a more straightforward case for Lyft because it's a simpler business model. It's in one market. It's got less diversity in terms of products. So for them, it's really about continuing to grow that customer base, to grow the average spend per customer, either through people taking more rides or doing more things like kind of food delivery, so that they grow into the cost base. And I think they also need to see the competitive dynamics kind of calm down. There's still a bit of a kind of land grab going on, and that's pushing the sales and